From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. You might think tax season is over, and you're right. But when it comes to tax strategies and planning, it's an ongoing process. So joining me today is Mark Sipos, the Director of LFG Tax Services, to discuss what tax strategies you can use outside of tax season. So Mark, we often think about using the three buckets when it comes to financial planning strategies, but you can also apply it to taxes as well.
You can, but here the buckets refer to how your income is taxed, not when you actually take the money. So let's talk about the first bucket, which is ordinary income. People know that usually applies to your paycheck, but it can also be interest from CDs, high yield savings, and even money markets.
Yeah, so even safe savings can hit you pretty hard on the tax return.
Exactly. These are taxed at your regular income tax rate, and in our marginal tax rate system, the more you make, the more you're going to pay. So many people don't realize their pension, Social Security, and investment income kind of top on each other and create a higher tax bracket.
Oh, that's a good explanation. So what's bucket number two?
Bucket number two is capital gains. So that would be sales of stock, ETFs, or even real estate. And depending on your income, you could pay it much lower if you hold them for at least 1 year.
So what kind of rates are we talking about?
Depending on your income, you could pay at 20%, 15%, or even 0% depending on your income. A married couple making $100,000 or more can actually still pay 0% long-term capital gains tax because of their standard deduction.
So that's a tax rate I can really get behind.
You and everyone else, Jim. That brings us to the third bucket, which is tax-free income. These are going to be municipal bonds from your state or cities. And if you buy a bond in your own local city or state, they're triple tax-free, meaning you pay no federal, state, or local taxes.
So can you give us a real-life example of how all these strategies could come together?
Sure. A client came to us earning over $350,000 in interest income, mostly from CDs and money markets. They were getting really hammered on taxes. We shifted their strategy to include muni bonds, some tax-deferred investments, and a conservative dividend portfolio. That mix tapped into all the three buckets that we're talking about, and our tax team estimated it would save them nearly $60,000 between federal and state taxes, and for high earners like themselves, that would include the net investment tax.
Wow, that's huge. And a great reminder is not just what you make, but it's also what you keep.
Exactly. Financial planning should go hand in hand with tax planning, and it takes a coordinated team to do it right.
Thanks, Mark. There's some great information. So if your tax bill was a little too high this year, now's the time to make a change. This illustrates clearly how a coordinated approach between your financial team and your tax team can really help you and minimize your taxes all along the way. So if this is important to you, give us a call at 216-520-1711 or schedule online at lineweaver.net. Here's Fox News Sunday.